Hello, everyone, and we got to talk about a serious issue. Bitcoin is becoming more centralized than ever, and this could be bad for more than one reason. As of the most recent report, just two entities, two mining pools, the biggest two, have over 50% of the hash rate. Now, if you have over 50% of the hash rate, you can do a 50% attack, but the two would have to join together in order to do that. And because Bitcoin has so much money behind it now in the form of ETFs and institutional adoption, people are scrutinizing it very hard and they're probably all under watch. So they're not very likely to do that because the feds would definitely go after them if they did. Now, who are these pools that control so much of the Bitcoin hash rate? Well, they are Foundry USA, which controls 26%, and Antpool, which controls 30%. If you take the top five Bitcoin mining pools, they control something like 85% of the hash rate. Antpool controls 30, Foundry USA controls 26, F2 Pool controls 12.5, Via BTC controls 11.6, and the Binance Pool is 8.5. So all of those put together control something like 80% of the Bitcoin hash rate. So Bitcoin is not nearly as decentralized as some people would think, and critics are alarmed. Now, to be fair, on the analysis, like these pools aren't completely uniform. They are made up of a lot of people contributing, and those people can switch their hash rate to another pool at any time. But the thing is, it takes time to do that, and not everyone may be alerted at the same time. So if there was some nefarious planning between the two biggest pools, they could actually pull a lot of stuff off before anyone noticed. Of course, the authorities would notice, and I think the people that pulled those scams would be in a lot of trouble. And obviously, in this case, the crypto community would not support them on this. But the thing is, if there's a malicious actor or something, that could be really bad, and that could actually take the entire crypto market for a spin. So that's the first downside. But the second downside may be one that people don't really think of too much, because the thing is having so few pools control so much of the hash rate actually makes it easier for governments to actually control Bitcoin. Because governments basically have to just tell these two pools to enforce KYC, AML, or something else. And if the pools don't do it, the governments could shut them down. And if they don't want to get shut down, they might be be forced to do the KYC stuff. So Bitcoin could definitely lose a lot of its kind of anonymous or privacy things that it was kind of born with. I think it's very, very bad for idealists. So Chris Black, a noted figure in the crypto research community, voiced his concerns on the social media platform X this Wednesday, emphasizing the gravity of the situation. He said it's important and assured that his disclosure is a reflection of reality, not FUD. And it is true, because these two pools control so much of the hash rate, and Bitcoin, the security and everything, is made out of the hash rate. The two largest Bitcoin mining pools, together controlling over 50% of hash rate for over a year now, are regulatory compliant and require all miners to comply with KYC. The government has clear identification, visibility, and control over more than 50% of Bitcoin miners by hash rate. And that's true. It doesn't mean 50% of all miners, because there's a lot of smaller miners. But in terms of 50% of the hash rate, the government knows where that's coming from, so they have a clear view on the Bitcoin blockchain. And the thing is, the government can make demands of these people, companies, and they'll be required to comply. As this trend grows, Bitcoin's decentralization and game theory both get affected in a negative fashion. So since the government knows which people and which companies that the cash rate is coming from, they can actually make demands of these people and companies and threaten them, either threaten them or, threaten to shut them down if they don't comply with federal authorities. So this is definitely threatening on Bitcoin ethos. A few years back, we did have this scare with China saying a lot of the hash rate's coming from China. And if the government decides just to step in, that would be problematic. But now it's not from China anymore. It's actually from the United States. And you risk kind of the same thing. A few years back, archive data paints a picture of a more diverse landscape in dominant mining pools. Follows Black's remarks, there was a flurry of responses. John Black countered, these two pools only have 51% of the hash rate because they are behaving for now. He speculated that any misbehavior would prompt a shift in hash rate to smaller non-KYC compliant pools. Black dismissed this idea as completely theoretical, and I actually kind of agree with Black. I think that is very theoretical. Like I said, it would take time for these things to skip. It would actually take time for these things to change. And also, if you really think about it, even if you switch to a non KYC compliant pool, the government already knows who you are. So it's not like the government will not know who you are just because you switch, because they already have like an ID on you. So even if you switch, they can actually just come to your physical location for the mining. Because once they have a name or a company name, it's hard to make them forget who you are. I mean, this is like Uncle Sam we are talking about. So like Harry Beckworth did address Black, saying, I can definitely appreciate this, but you are making mining pools sound monolithic, as there are single players, and that is not true. That's also true. They're not single players, and people can switch their hash rate. But here's the thing. Once again, the government already knows who you are if you're part of these hash pools, because you have been playing with KYC AML for a long time. So, like I said, they have tax on you now, regardless of they have a track on you now, regardless of where you actually go. So if you switch to like another pool, they know that Joe switched to pool X, and they still have the ID on Joe, even though the pool X does not have KYC AML. So the thing is, this is actually significant. This is definitely making Bitcoin losing some of its ethos, and it does actually give the government more control over Bitcoin. So that's the news for today. Let me know what you think. Like and subscribe. Hit the bell notifications button. Thank you, and have a nice day.